Morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Okay, let's kick off. So this week we've got a raft of inflation numbers out across the globe. You've got Canadian inflation coming out, which is expected to be lower than expected. Again, we are talking about headline inflation. Canada has come in and said there may be one more interest rate rise in Canada, which would push the rates up to 5%. So they're expecting a 25 basis point rise in interest rates when they meet next week or the week after. What you've got also is French inflation expected to come in lower than expected. German inflation expected to come in lower than expected. And you've got European overall Eurozone inflation, which is expected to come in lower than expected. You've got two people speaking this week to keep an eye on. Christin Lagarde, head of the ECB, will be talking over Monday, Tuesday, Wednesday, probably talking about the state of the euro, state of the eurozone, state of the EC, state of the economy, inflation, etc., etc. One to keep an eye on. Remember, Europe is in a recession. It's minus 0.4% GDP. Overall, that will impact employment. You'll see unemployment rise in the Eurozone. Why? Simply because if there's not being that production or they're having the levels of volumes of falling away, then obviously manufacturers and producers are going to be laying off staff in order to cut costs. Staff is the highest element of a business, more than the rent and more than the council tax and more than all the other costs of running a business. It's the cost of manpower. So unemployment will rise in Europe. Now, also, they've got a problem there because Christine Lagarde and the ECB, the European Central Bank, want to raise rates in order to combat inflation. Inflation is hot there. Now, when we're talking about inflation going down in Canada, inflation going down in France or Germany or Europe, we're talking about headline inflation. Core inflation is really burning, and core inflation has not been impacted by the recent rises for the last 18 months or 16 to 18 months, where the central banks have taken action. Europe was late in taking action on inflation, only started taking action around about July last year, where the other countries began also late about February. So inflation has been tackled, but not been tackled enough. And the ECB and the EC, European countries, know fine well that they're going to have to raise interest rates a lot more to get inflation under control, which will send the Europeans into further recession. UK has got reports of GDP coming out this week, and they're just literally on the edge of not going into recession. They're expecting 0.1%. Now, if it goes into negative, which is a technical start of a recession, then you see the pound come off. However, interest rates will continue rising in the UK, and that will be the support for sterling against a basket of currencies. As far as Canada is concerned, then obviously you've got core inflation, which is raging there, but they've also stated they may raise rates by 25 basis points, as mentioned earlier. You've got Jerome Powell speaking this week to the Senate. Now, he made a few warning shots last week when he spoke to Congress. He's going to be speaking again about inflation, about interest rates, the state of the economy, etc. And the US is only just also in positive GDP by 1.4%. However, that's likely to fall as we go towards the end of 2023. Once we go towards the end of 2023, then what you're going to have is the US in a recession. And Jerome Powell and the Fed are trying to manipulate the numbers in order to not necessarily mislead the public, but not cause a panic where the overall consumer confidence or confidence of the Joe public will drop to a negative level, and that will further impact overall the economy as to what's happening in the US. Remember, once production falls or once volume falls, again, companies will look to cut staff. So you're going to have rising unemployment through 2023 and 2024. I can't see interest rates coming down at the earliest till maybe July 2024. And I'm not even sure if that is going to be a solid date. So we're talking about around about a year from now that maybe interest rates will start coming down. If any of the central banks start dropping rates before mid-2024, then all they're going to do is fuel inflation. Geopolitically, keep an eye again on Russia-Ukraine. Putin is very, very unstable. He feels threatened, and if necessary, he could take dramatic action. I did say yesterday on Instagram regarding a tactical nuclear weapon, and that was a possibility. And I got a lot of pushback back from that. That's a load of crap. That's not going to happen. Don't talk rubbish. It's all BS, etc. Well, it could happen because Putin is unstable, and I'm not sure if he wants to lose control of Russia. However, things have calmed down there, apart from the war ongoing, obviously, but things have calmed down on geopolitical scale. Keep an eye on other aspects of the world geopolitically. Oil has come off. Oil will continue dropping as long as there's fears of recession. Interesting one is Bitcoin. Where's Bitcoin going? It's solid above 30,000. I think it's going to go to 35,000 and move on from there, especially now they've got BlackRock and other hedge funds buying into the cryptocurrency. So that's one to keep an eye on as regards cryptos. Remember, you can share, subscribe, comment. I've also got a book on Amazon. I'm writing another book on driving markets for beginners. I'm looking to do other things in order to enhance your trading experience. And you can share and comment, and obviously look at other media sites as well. I'm looking for good positive feedback or even negative feedback. Whatever feedback is, all good feedback. Have a good day.